Hello everyone, myself Aadish Jain. I am Associate Director in a Risk Advisory Division of DBNC Global LLP. Recently, tax authorities in India used AI-based analytics to review GST billing data across sectors and has uncovered a major sales suppression fraud in a restaurant sector with an estimated 70,000 crore in suppressed sales since 1920 financial year. Key details. Over 1.77 lakh restaurants IDs were analyzed with around 60 terabytes of data scrutinized. Suppression percentage. Restaurants were found to be underreporting their revenue by an average 27%. Hidden turnover. An estimated 70,000 crores in sales was suppressed, leading to a projected tax loss of exceeding $2 billion. Instead of traditional manual scrutiny, the algorithm analyzed billing trends, tax filings, invoice patterns, and anomalies, identifying cases of suppressed sales and tax evasion. This clearly shows that surveillance today is not random, it is intelligent, continuous, and data-backed. What is AI-driven surveillance? AI-driven surveillance refers to the use of artificial intelligence and advanced data analytics by regulators and organizations to continuously monitor transactions, that detect anomalies, and identify suspicious patterns. Today, specialized tools such as SAP Analytics Cloud, ACL Analytics, IDEA, Power BI, and AI-enabled regulatory systems are capable of analyzing massive volume of structured and unstructured data. These tools process lakhs or even crores of transactions within minutes by running patterns recognition algorithm, performing trend and ratio analysis, identifying outliers and deviations, cross-matching data across multiple databases. Unlike traditional or manual surveillance, which relies on sample-based testing and human judgment, AI-driven systems review 100% of the data in near real-time basis. Manual audits may check selected invoices, but AI-based scans every invoices, every entry, and every mismatch. This shift makes surveillance continuous, automated, scalable, and far more predictive than the old reactive model. Implications for internal controls. Now, the key question is, what does AI-driven surveillance mean for organizations and their control environment? It fundamentally changes the way internal controls are evaluated. When regulators and stakeholders can analyze 100% of transactional data in real time, control gaps that earlier remained unnoticed are now immediately visible. For organizations, this means billing and revenue controls must be system-driven and well-documented. Any manual override must be supported by audit trails and independent review. Reconciliation process must be automated and timely. Data consistency across ERP, GST filings, and financial reporting must be aligned. Access controls and segregation of duties must be strictly enforced. The traditional reactive model, where issues are identified months later during periodic audits, is no longer adequate. Internal controls today must be proactive, technology-enabled, and continuously monitored. Now, what can we do as auditors or risk advisors? As in auditors and risk advisors, our role must evolve alongside this technological shift. We can no longer rely only on post-facto reviews and sample-based testing. Instead, we must help organizations transition towards intelligent and preventive control environments. From an advisory perspective, we should focus upon embedding continuous monitoring mechanism within core systems, recommending automation of reconciliations and exception reporting, strengthening data governance, accuracy, and ownership framework, reviewing user access, segregation of duties, and override controls, leveraging internal data analytics to proactively identify red flags. More importantly, we must shift the mindset of the management from viewing compliance as a periodic obligation to treating it as a real-time risk management function. In essence, organizations must assess themselves within the same analytical intelligence that regulators are now deploying. AI-driven surveillance is not just a regulatory challenge, it is an opportunity. An opportunity to strengthen governance, an opportunity to modernize internal controls, and an opportunity to shift from reactive compliance to proactive risk management. Thank you.